Welcome to another AriasWave market analysis video. Now, in this particular video, I want to talk about the USD against the Swiss franc. Now, I don't know if you know this, but the Swiss franc is definitely correlated with gold in a sense. Now, the wave pattern is not exact by any means in terms of exact correlation. Nothing is ever exactly correlated, right? But as you know, if you've done your research, gold and the Swiss franc are somewhat correlated. Now, using AriasWave, I have determined for a while now that this is the case. But I've never made a video about it. It's been a part of my back testing in AriasWave because obviously I designed AriasWave, I created it, and it's like a roadmap to waves. Right? I believe it's the most efficient and most accurate knowledge of the waves that you can possibly get. Now, I want to explain to you what we're seeing. What is the US dollar doing? Like, you need to ask these questions, right? You need to ask, what is the US dollar doing? Like, everybody thinks, oh, the US dollar is going to crash and it's going to collapse, and nothing ever happens in a straight line, right? As we know. So I want to explain to you, or try to explain to you in this video, what is going on. So I don't know if you've seen the long-term chart of USD against the Swiss franc. You can find it online. There's been various articles on it, and they've got this chart that goes back to 1819, right? Now, during the time where I was first developing AriasWave, I used to always look at this chart, and I used to always think about the pattern, because it's a very long-term pattern, right? And it did form the basis of a lot of my testing and also understanding of how long-term RS wave patterns can be, or in general, just price patterns. And what I found was pretty amazing, and I have not changed that view to this day. Even after all the testing, all the ups and downs, I have not changed what the pattern is in the USD. Now, I don't know if you're familiar with my gold analysis, but in my gold analysis video, I'll link it below, we are dealing with an ending pattern in gold, right? So, and you're probably wondering, like, hang on, but gold's been going up since, the early 1900s. What kind of ending pattern could that be? Well, it's an E wave, right? And it's a weak wave E. So I got this information. I determined this pattern, that it was this pattern, separately to the USD Swiss, and it's the same pattern, right? So it's an ending diagonal. It's a type 1 ending diagonal, just your regular run-of-the-mill ending diagonal, where wave 1 is 3 waves, wave 3 is 3 waves, wave 5 is 3 waves, right? Now, it's a little bit different in gold, but I'll get to that in a minute. What it is in the USD Swiss is an ending diagonal since about 1920, around that time, right? That's when it started. Around 1920 is when this E wave started. So we had wave 1 was a very small wave 1 zigzag down, followed by a pretty quick little mini wave 2. And then it was a pretty big wave 3 that went all the way down to the 1980, around 1978, or around 1980, let's just say. So that's 1, 2, 3 done. So since then, we've been working within wave 4, right? Now, because wave 2 up the top was short and sharp, wave 4 will be fairly extended and sideways. which means that the USD is not going to collapse any day soon, right? But it does have other implications as to what it can do to the markets, right? And I do believe that interest rates and the USD are correlated, okay? Now, I'm not saying they're correlated exactly, but when a decent move happens, you will see a reaction in rates, regardless of the bond buying and all those programs. So, because it's really important since the 80s to understand that the USD has a lot of influence over what happens in the markets, it really pays to understand what it's doing now. So, what it's doing now is basically in the process here on this particular chart of creating a 1-2 pattern. Okay. So, for anybody who's looking at this now thinking, this B wave, where did it start? Well, it actually started around 84. So, from 84 until now, until 2011, that's how long this B wave lasted. And ever since then, we've been going kind of up and sideways, right? And the reason for that is because it's leading. This is leading oil, this is leading gold prices. It's leading interest rates, right? It's the leading indicator in this scenario. But it's not producing the exact same pattern that gold is, okay? Gold is giving us an indication of, and a good one, of how expanded the whole move will be long term, but it doesn't really tell us much about what's going on right now because it's still going up. So I already know, according to AriasWave, I understand what's going to happen with gold. There's going to be a severe drop in gold. Now, in this market, in this, USD against the Swiss, there's going to be a severe upward movement as soon as this correction finishes, right? So once it does finish, this is around the same time that all hell will break loose in terms of interest rates versus, the stock market and everything else in between, asset prices, things like that, right? So because we're in a wave 4, and yes, sure, it is maybe, expanded to the downside, we are going to see a reaction to the upside. Now, you cannot assume that this C wave is done by any means just because it's had a sharp move and it's starting to sort of move down. The mistake that a lot of people make when trying to identify waves is that they label something complete and it's way too small. And also, they're only using one source of information to make that determination, which is why a lot of people just give up on waves. And, well, apart from the fact that a lot of wave systems are garbage, they give up on waves in general because they think that macro is better and it's going to give you better information and blah, 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 right? But you'll never get the same insight as you do from waves because you can definitely trade it using futures, CFDs, in a much more accurate way rather than just say, oh, I am bullish now and I'm going to put my stop at the bottom because I don't know the waves. I'm just going to put it right at the low. And you're probably going to severely, limit yourself there. But, in terms of options and that's a different ballgame. You still got to know the waves, right? You still got to know what kind of impact it's going to have. So this is fairly critical when it comes to why I decided to invest time in creating AriasWave, because I like to know what we're up against. Now, judging by this 1-2 pattern that we're seeing, which is not done yet, we saw an A, It was a sharp A, right? You'd never guess that was a three-wave move because it's so sharp. We had a B. You never guess that's a three-wave move once again because it looks like a flag on a pole, right? But if you drill deep into the waves, you'll see that it's a sharp A, a quick B, and an ending C. And then since then, we've had a 1, 3, 3, 5, 3, 5, 2, 3, and we're going to see a 4 and a 5 soon, right? And then we're going to see a D and an E. So there's plenty of time here, but not a lot of time. There is definitely a lot of time for you to learn the waves and understand the waves. But in terms of a lot of time in the markets, there's not a lot of time left in the markets. That's all I can say on that one. Because once this correction is done, it's going to go straight up. Now, obviously, the sideways corrections gives us clues using alternation as to what kind of wave fall we're going to see up the top. But the meat of the move is going to be straight up. It's going to be very profitable. So this is a very important piece of information. It's going to be wave C of wave 4 of this ending diagonal, which is going to be drawn out, expanded, right? So yeah, absolutely, the US dollar is in a downtrend long term. But the problem is that there's a lot more to it when your wave 4 expands and we're dealing with big patterns that span large time frames, right? Looks can be deceiving if you don't know what you're doing. In fact, looks are extremely deceiving if you're just trying to use them as a guide of any sort without really knowing the waves and just saying, oh, the US dollar is collapsing. Right. I can tell you that you're gonna have a lot of trouble in life if you don't really do your research and understand things for what they actually are versus what you think they are. That's a critical component. So I believe when this C wave starts moving up, we're going to see higher rates. It's going to drag up interest rates. And I'm not going to say which one is first, the chicken or the egg. It's just that all the patterns are pointing in this direction. It's not just USD Swiss, it's the DXY. Right now, this is something I wanted to mention also. Let's quickly switch to the DXY chart. All right, long term. Now, obviously, we don't have much data on the DXY or the Euro USD, but what do you think this pattern is? It's a B wave down here. The same thing is going on here, right? Yes, it bottomed a little bit earlier here, but it doesn't mean a damn thing, right? It doesn't mean a damn thing. It's all going to do the same thing long term. This pattern is also part of a wave 4 down in the DXY. Okay? Just because we don't have the data, you put 2 and 2 together. Once you look at all the charts, you put 2 and 2 together and you realize what you're seeing. This is why learning the waves is absolutely paramount. Because how would you ever know what this is? Well, B wave of what? It's a zigzag. Right? I spent a long time trying to figure these things out. And once it all came together, it all started to make sense. Okay, just because something looks like it's going down, don't be like economists. Economists use extrapolation. The herd uses extrapolation. That is the definition of a herd mentality, right? We're using extrapolation. Okay, it's going up, it's going to continue going up. That's not the case. Looks can be deceiving. Use the waves, use your knowledge. How are you not doing this already? If you're not, you need to learn the waves. This is why I say, if you look at my signature, learning the waves is the best investment you could ever make because you will lose so much money in this game, regardless of institutional traders and banks and whatever trying to take your money, the whole jargon, the whole story, right? Of course, that's always going to be the case. But if you're ahead of the curve and you know the waves, nothing will stop you as long as you pay proper attention and use proper money management and all the things you have sound principles, you will never fail, right? Yeah, you may have some losses here and there, but that's probably just due to some error in identification. Maybe you're having a bad psychological episode during a period of time. Hey, it happens to everybody. We're human. But this is the kind of insight that AriasWave gives you. And sure, I could just tell you right now, and that doesn't mean anything. It doesn't mean you're going to know AriasWave. I can give you all the ideas. I label every chart using AriasWave. Does that mean that you know exactly how it works? No, it doesn't. Okay, it does not. So definitely understand that this is not going down in a straight line, and it's not going to happen anytime soon. And if you understand my Bitcoin idea, and if you think that Bitcoin to the moon, this and that, it's not the right time yet. Am I saying that it's never going to be the right time? I never said that. In fact, using AriasWave, you could probably get into Bitcoin right before it makes a really massive move like everybody wants it to, right? But just hoping and wishing and dreaming and listening to Winklevosses and hedge funders tell you what you should do and what they're doing, I don't trust the media, right? To me, people use the media as a big giant pump and dump scheme, right? Collusion, media collusion. I don't care what anyone says, right? Unless you know the waves, you're basically going on what most of the people going on, the crowd is going on. It's the news. You might as well just be listening to a hunch or advice from your friend, right? Just because everybody else is doing it, do you really think that you should be doing it? Do you really think that that's the big deal right now? These are the questions you need to ask yourself. These are the questions I asked myself before I bought Bitcoin as well, right? Sure, I want to buy it, but do I know what it's going to do? That's when I started learning the waves. So I could understand why I would buy this, right? And it's not the time for Bitcoin now to go to the moon. It's not. It will come. Yes, it's not yet though. Okay. Everybody has it in their mind, USD collapse. Of course they're going to go all in and cause expanded corrections, right? This is normal. This is what happens. Now, going back to USD Swiss. It's a slightly different pattern than gold. I'll link that idea below. But the general thing is true, right? If interest rates topped in 81 and have fallen ever since, well, when did the B wave start? Like I told you already, it started early 80s in this move. So basically, if you're under 40 years old, you have never seen interest rates go up. You have never seen it. So you can't talk about it. You can't even predict when it's going to happen. All you're going to do is listen to Mr. Fed chair or any other person on the news or blowing out some data figures. You're just going to try and listen to what they say all the time, and you're really ever going to be ready for the next move, right? Now, this move has been preparing for a while, so it's definitely lagging, but it's going to happen, right? There's a whole bunch of other markets that are telling me the same thing. So I don't care about what the news says. I don't care about data. The waves are very clear. They're very repetitive, and they're about to show you exactly why AriasWave is so reliable. I don't care if it takes a year or two. You will eventually have to come to the realization that you should learn the waves, especially if you keep losing money. This is totally important. So hopefully you found this video informative and interesting. Thank you for watching.